So, big news too with we're releasing oil from the strategic reserve. President Biden 2-3 weeks ago said that the planet's warming is a threat to the human existence as we know it. Right, so that's why he is drastically cutting oil production in the U.S. right to save the world. While we cut, OPEC is deciding to produce more. So now, what do we have? We have massive inflation in energy, prices out of control. You're making our enemies stronger in the Middle East. And now, you have the icing on the cake to combat the inflation that this administration created. You're releasing oil from the strategic oil reserves as if this oil has less CO2 than the oil you cut from our producers or something. But I guess that the threat to human existence, as we know, we can hold off for that for a little while we do this. But there's just so many storylines. There's so much irony here, even about the amount that they're releasing from the oil reserves, right?
Yeah, we're doing 50 million barrels. This isn't apples to apples, but we were joking about this earlier. Basically the U.S. uses around 20 million a day. So that's a few days worth. The globe uses about 100, give or take, and I'm rounding there. So don't email. Well, email us even if you're pissed. Frank at CurzioResearch.com. But don't hold our feet to the fire on those stats. This is just a Band-Aid. It's a good chess match. I give them credit. I give the administration credit for what they're trying to do because they want a short-term pullback in prices around the holidays, in my opinion, to kind of help that consumer confidence, help polling, help all that kind of things. But when you think of this as a chess match, it was already yesterday before this announcement, Bloomberg reported that OPEC was saying, hey, they're essentially going to retaliate. So if the big headline here is, hey, look at the deal making done by President Biden because he convinced through his leadership to get China, India, and I think there's a handful of others that are going to release this to try to, lower the price of oil. In reality, I think the market is looking through that. I think this has been priced in. I think Goldman put out a good note about it's already priced in. Oil is up over 1.5% today. It's damn near 52-week highs, marching towards $80 a barrel. We've been bullish on these names. I recommended ExxonMobil in our Dollar Stock Club. It's not done great, but it's positive now. I just don't. There's no way that this makes me less bullish. It makes me a lot more bullish on energy, especially going into next year, because this is foreshadowing that they're not doing anything about the core problem, which is production and drilling. They're just playing politics with it, and that's a result in higher prices.
So I'm going to say this outright, and here come the emails. Okay, so out of all the things I've seen from this administration and what they've done to weaken our country, leaving troops in Afghanistan, right? Illegal immigrants running wild at a 60-year high. I'm not going to say deficits because you could blame that on every single president. So even the infrastructure bill, whatever, I won't even put that on Biden. But defund the police, influencing racism, allowing critical race theory to be taught in our schools while creating a white supremacist theme that doesn't exist. Forget all that shit, Daniel. Meaningless. Having the U.S. no longer be energy independent has the biggest long-term consequences than any of the things that I mentioned. Affordable energy is a requirement. You need it to have strong economic growth. It's no coincidence that the strongest countries in the world, most powerful countries in the world, whether it's U.S., China, Russia, India, Saudi Arabia, Canada, they have the most natural resources. Being the producer of affordable energy, which we are in the U.S., makes us stronger. Other countries will always need us. It allows us to have power, the upper hand to negotiate with other countries for so many different things. Taking that away weakens us. It makes our enemies stronger, which I don't know if you're familiar with other OPEC members, however many there are. What is it? Something like 20-something, I think. I think there's 14. You can correct me on that. But I want you, some of the members in OPEC, I just wanted to tell you, right? Because we're making OPEC stronger. Iran, Iraq, Venezuela, Libya. Not the most friendliest nations. Okay. Now, OPEC's been around for 60 years. Where in 1973, we imported 35% of our oil, and we were like back then, holy cow, it's too much. We got to do something about this. By 2010, it surged to 60% we were importing. In 2019, thanks to our new technologies, fracking horizontal drilling that went from 2011, 12, 13, all the way through this decade, we became a net petroleum exporter of oil for the first time ever. And that's going back to 1949 since EIA kept statistics, which is amazing. Now we're about to give that up. But the irony here is we're giving it up because current administration, a lot of people believe that the world is in danger, which is okay. Okay, that's fine if that's what you believe. But now you're releasing oil from the strategic reserves because you created a runaway inflationary environment. Those higher energy prices impacts everyone, every business, every consumer directly. But now you're releasing this as if the world doesn't matter all of a sudden. So for me, the political bullshit needs to stop. What pisses me off the worst, Daniel, is how many funds are behind the Vanguards, BlackRocks, CalPERS. These are the guys that are running our money. And they're using that power to force companies to make stupid decisions for political purposes, like telling our large oil companies that you can't drill. Don't drill. We don't want you to drill. So what's going to happen? We don't have the replacements here. We don't have alternative energy. We don't have the replacements right now. So what's happening? We're seeing massive, massive inflation. These guys aren't drilling. We get, these little idiot guys that take a position on the board that are able to influence these bigger shareholders. And the way to combat this is, if I was these oil companies, I would go private. This way, I love Chick-fil-A. Chick-fil-A's business model, we're private. They get attacked for being a Catholic organization, whether it's from the transgender coup. Whatever. You know what they tell them? They say, fuck off, we don't care. However, if you're large, well, they don't curse. But they do say that when they're together. They're like, these guys nuts, whatever. This is our company. We're running it the way we want to. You can't say that if you're a 2% shareholder and the largest shareholders control 30, 40, 50% of your company now, right? Because then they could influence. And now you have the large oil companies in the world being told that they can't drill, which is insane. And now we have runaway inflation. This is the most important point. If we could lower energy prices, inflation will go away. And because this impacts every business, this is one of the reasons why everyone is forced to raise prices, every business, because the energy prices. So the fact that we're even messing with this, that we become energy independent, is just crazy to me, considering that China's communist country, Russia, you're looking at places that don't care about this. And if they're not lowering their stuff, which of course they said they're going to do, but if they're not really lowering their CO2 emissions, which, Beijing is doing it right now because they have to, they got the Olympics a couple months, but they're not going to do it. They're still producing coal like crazy, and you can't blame them because it's energy, it's cheap energy, and they don't really care about the environment. But if our other countries don't care about the environment, and we do, we're making them significantly stronger. And we're losing our edge here. And that's what's crazy. So I understand the pullback. I understand if you think about climate change, but we need something to replace it. You can't just stop drilling oil and say, we're going to stop drilling. Someone else is going to drill it. It's the same CO2 that's hurting the world, right? So let's drill it for now until we have solar, wind, nuclear, all this stuff that we could replace. But if we don't replace it, man, you're going to see $120 oil prices. We're going to see $5 a gallon here, which you're seeing in some places in the U.S., but for me, this just doesn't make sense to me. Again, nothing really does have to make sense. It doesn't matter. Even if you capture shit on video these days, you could still have an opinion and disagree. I could shoot you in the head, Daniel, and I could say, I didn't shoot you in the head. And it's okay. Well, you shot him in the head. No, I didn't. I didn't shoot him in the head. What are you talking about? I did not shoot him in the head. Yeah, you did. We saw it on video. It doesn't matter. That's the environment we live in now. Sorry. I can't
that's a good rant. Yeah, it's good energy rant. You took a lot of, that's fun. Hey, but if you agree with us, if you're listening to us, I'll give you two names. Devon Energy, which is an old fan favorite of ours. That stock's been on a tear a lot with oil companies. And Continental Resources, who the chairman, I think he moved to chairman, Harold Hamm. If you can't back a guy that writes damn near $1 billion in a divorce check and has to write it out, I don't know what to tell you. So those two stocks, I think those are, if oil stays here or goes up, Devon's doing a great kind of split shareholder friendly thing. Mm-hmm. They're doing a minimum dividend and then they're going to scale it up and down depending on oil revenues, which I think is smart. It's going to attract investors' base in my opinion. So yeah, Devon and Continental, if you want to play, if you agree with us on higher energy prices and want to profit, which is what you should do. Don't just be upset about how the world is since you don't make any of the rules and you're stuck to playing it. Profit from it. And those are two names to do it.
And Harold Hamm Continental, just to let you know, I don't know how it's been the last 2 years. I haven't looked at it, but the last 10 before that, 12 years, again, going through the fracking boom. These guys don't hedge, Dan.
He didn't hedge at all.
They don't hedge.
Hedge. I don't want to say at all, I don't but care very little. Prices. Yeah, that was a big deal.
Very, very little hedging. And I mean, so what does that mean? It means that they're going to be more tied to the rising price of oil than anybody else. Because a lot of people hedge, and, you're hedging, you're locking in profits. It's smart. You're looking at the largest companies with the largest fleets in the world usually hedge. This way they lock in production and lock in price. This way it's easy to figure out CapEx. You know how much you're paying. You're looking at airline companies as well. But if you don't lock it in with airline companies now, you're seeing demand come back. And if you didn't lock in prices at a lower level for maybe 18 months, Now, look where oil prices are now, and you pay. So a lot of these guys like to lock in. Continental is one of the ones that doesn't really hedge. So if you think oil prices are going higher, this company is going to benefit more than the average oil company, but it will go lower as we saw when oil prices crash than most other companies.